Hello guys, welcome to our channel. Today we are going to see about who is a trader, who is an investor and which one is best, whether to be a trader or an investor. Come, let's get into the video. Before that, please don't forget to subscribe. Whether it is a trader or an investor, everyone goes to share market only to earn profit. It means their ultimate goal is to earn money, that's it. Then you may have a question in your mind why they are called by different names. Even though their ultimate goal is to earn money, to achieve that goal, different people use different strategies and different approaches. Investing and trading are very different approaches of wealth creation or generating profits in the financial market or stock market, whatever so called. To understand this, let us see a small story. Imagine today you and your friend went to some wholesale shop and bought equal amount of mango seeds to sow in your agricultural fields. But what your friend did is that he sold them to someone on the same day with an higher amount so that he could earn some profit immediately, and you sowed the seeds and let them grow for few years till they gave you fruits plus new seeds. Instead of selling the seeds immediately, you sowed the seeds and waited for a few years to enjoy the full benefit of those seeds. Eventually, you got more benefit from those seeds. Now you can identify the trader and investor easily. Your friend who sold the seeds immediately for profit is known as a trader, and you planted the seeds and let them grow for years to get the benefit out of it, and you are known as an investor. Now let us see the characteristics of the investor and the trader, but before that let's answer a question which many of them carry in their mind. Who earns more in stock market, whether trader or an investor? Actually, the answer to this question would be very tricky. Some people say traders make more money than investors, and a few of them say that investors earn more money than traders. But the answer to this question depends on many things. Come, let's see what are those things. It depends on a person's level of knowledge, expertise, and experience. If you have great market research and you have more expertise and experience to execute multiple trades within very short period, then you have to choose trading as your preferable option, or else be a long-term investor with the help of fundamental analysis. And the next one is risk appetite. First, let us see what is meant by risk appetite. It is the level of risk that a person can take. For example, if you have a capital of 100 rupees and you are ready to risk your money, or you are ready to bear a loss up to 10 rupees, then your risk appetite is 10%. If you can take high risk with the capital used, you may go for day trading, or else it is better to stay away from that and be an investor. The next one is capital used. It is very important. If you have less capital amount to be used with the above qualifications, then first choose the option of trading and build your capital. Then gradually you can shift to become an investor, and the next one depends whether you are an individual or institutional operator or investor. It may be a mutual fund company or else an asset management company, many things. If you are an individual operator having the above three qualifications, you can be a trader or else be an investor. But actually, as far as the institutional investors like AMCs and mutual funds are concerned, they mostly do a mix of both investing as well as trading. And friends, very important fact is that, listen carefully, very important fact is that most of the people who earn from share markets are both who does trade as well as investing at different times. I hope now you got the answer for your question. Now let us see what does an investor do and trader do in the share market and what are their characteristics. The first one is time period. Trading involves short-term strategies to maximize returns daily, monthly, or quarterly. Trading is a method of holding stock for a short period of time. It could be for a week or more often a day. Sometimes within hours also they used to trade. Traders used to hold their stocks till the share price reaches the short-term high performance, and they sell it immediately once the stock reaches the short-term. On the other hand, investing takes a long-term approach. Actually, the goal of investing is to gradually build wealth over a period of time. Investors invest their money for few years. They don't care about the short-term market changes or fluctuation which happens daily. And you also come across the news daily because it is insignificant and useless for long-term investing approach. The next one is capital growth. Traders look at the price changes of shares in the market. In case if the price increases, traders may sell the shares and again wait for the dip in price of that shares. Few traders also earn profit through short selling, which those things I will cover those topics in further videos. And simply to say, trading is a skill of timing in the market. Timing is very important in trading, friends. Whereas investing is an art of creating wealth by compounding interest and dividend. This is possible only by choosing a qualitative and a potential stock in the market. Risk. There is no doubt that both trading and investing has risk of losing your entire capital invested. However, trading involves high risk and it will give you higher potential returns because the price may increase or decrease in a short period of time. Then immediately don't think investing has low risk and low returns. That is not correct. Investing is an art. It takes time to develop. Investing has low risk and low returns only in a short period of time, but it may give you higher returns by compounding interest and dividends if you hold it for a long period of time. Daily market changes do not affect on quality of long-term investments. The next quality and very important quality is art versus skill. We can learn this easily with the help of a cricket match. Actually, I want to show you a good example. I think everyone likes cricket. Simply if I have to say, trading is a one-day cricket match. On the other hand, while investing is a test cricket match. You can see skillful players in team who are expected to strike fours and sixes to score higher in one-day match, whereas the art of the game is seen in that test match only. Similarly, traders are skilled technical individuals with good knowledge of technical analysis and learns the market trends to earn higher profits in the short span of time. So, if you want to be a trader, you should have a good control over technical analysis. Actually, friends, technical analysis is related to psychology of the market. Investors, on the other hand, analyze the stocks they want to invest in and they used to do research on opportunities and management abilities etc. of the company in which they want to invest. Investors also learn business fundamentals and importantly they are committed to hold their investment for a long period of time. And the next one is who does what? What does a trader do and what does a investor do? Let's see that in this. Traders put money in stock market for a short period of time. They buy and sell the shares frequently to hit the higher profits in the market. Missing the right time may lead to huge losses for a trader. Trader looks at the present performance of the companies to hit the higher price and books profit in the short term. And as far as investor is concerned, investors keep themselves away from the trends and they invest in the value of the company. They invest for a long period of time but keeps an eye on the stock they hold. They patiently wait till the stock reaches its full potential. Once the stock reaches their full potential, they take action further. Ultimately, who achieves the financial goals are successful. Maybe a trader or an investor or both. The ultimate is who wins is who achieves their financial goals or successful. It's very important in the share market. Whether you can be a trader or an investor, it doesn't matter. But if you achieve your financial goals, then you are successful. Going back to our story, you are the one who decide whether to trade the seeds at a higher price, making smaller profit in a short time, or holding on and grow the plants for more seeds to sell at much higher price in the long run. Decide what you want to be. You can also take a dual role of a trader as well as an investor. Interesting fact. Are you interested to know who are the successful investor in the world? The first one is Benjamin Graham. He is the rock star of the financial world. Ben Graham excelled as an investment manager and financial educator. Actually, he believed in fundamental analysis, and good companies with strong balance sheet or those with companies having little debt with good profit margin and ample cash flows. Actually, he is the father of two successful investment disciplines which most of them are using now. The first one is about the security analysis and the second one is value investing. Interestingly, Donald Trump is also in the list of successful investors. And thank you guys for watching this video. Hope you enjoyed it. I will meet you in the next video. Please don't forget to subscribe to our channel and press the bell icon. Thank you. Bye bye.